The rabbit portfolio, the cat, the eagle, the elephant are some of the top 6 beginner portfolios in Japan that are recommended for long-term buy and hold investors to build wealth and prepare for the future. And those are great examples wherever you're living in the world. Interested? Let's get started, and let's keep in mind that those portfolios are better kept in tax advantageous accounts like IRA, Roth IRA, ISA or NISA in Japan, so that you can invest and get the benefit of appreciation or dividend or both tax-free. That's a great thing to keep in mind as we go along, and kudos to SBI brokers for the inspiration for this content. Let's start with the first portfolio, the balanced cat portfolio that aims to provide you an overall good balance of investment amongst the 3 funds. The first one comes from MUFJ or Mitsubishi UFJ Asset Management with one of their most popular funds, which is a NIMAXI Slim US equity, which basically replicates the S&P 500. You know the S&P 500, so that's a very easy fund to invest into to have good return, and it has a very low expense ratio, so that's a no-brainer for people to invest outside of Japan very easily and to get good return. The number 2 is very interesting and also from MUFJ Asset Management, and this one is a little bit different. This one goes into looking after dividends and is based on the Nikkei. So those are all Japanese companies. What kind of companies are we talking about? Kawasaki Keisha is more of a transportation company, but after you have Mitsui or SK Lines, also transportation. Then Mitsubishi UFJ Financial, Japan Tobacco, Sumitomo Mitsui Financial, so a lot of very mega corporations that pays really good dividend overall. And the third fund is also a high yield fund, but this one is based on the US and replicate the best high yield fund of the US. So as you can see, this portfolio is at the same time aiming for the US S&P 500 to give you a lot of potential upside, and at the same time provided you some income via Japan and US equity dividends. So a good one if you prefer not having too much up and downs and you are going towards retirement, so you don't want to have too much risk. Let's go to number 2, which has a fantastic name, which is the Samurai Rabbits. The first fund in the Samurai Rabbit portfolio is a fund from Nikkei Asset Management that basically look at the Nikkei 225 index and try to replicate it. So basically you are getting the best of the Japanese stock market. Well, it might be also the Topix or the Nikkei 225, depending on your choice. Actually, we had a video about it, so I'm putting it here or there for you to check it out. But either way, that's a good way to invest on the Japanese stock market. The second one is also quite interesting. This one is from Nomura Asset Management and goes into information technology, but based and focused on Japan. A little bit on the expensive side as an expense ratio, but here you have some of the largest electronic companies in Japan, such as Disco, Hitachi, Sony, Advanced Tech Corp, Tokyo Electron, Organ Corp, SoftBank, that you probably know. Rome, you may know less, Mitsubishi Electronic, obviously, and Nitto Denko. Those are some of the biggest and gives quite credible return over the long run. The third one is from Fidelity, and it's a REIT, or real estate investment trust, completely focused on Japan. To be fair, the real estate market in Japan has been really weak and really bad for the longest time, but in the last few years it has picked up, especially in residential real estate. As you can see, it has been going up and up really well. What has lacked is commercial real estate. Although there's been a lot of new development, the return hasn't been so good. This is about to change if we believe the news, because the Japanese companies have decided to refocus on their core competencies and shed all their real estate investment to real estate companies, to REITs, to private investment companies. So this has been started, and the potential is $175 billion. I converted the amount that you can see on screen. So there's a lot of potential here, a lot of things, a lot of transactions are gonna happen. So that could be an interesting play for the future in Japan in the next 5 to 10 years. Has it been interesting so far? If that's the case, please leave a comment down below, even an emoji, to let me know you have made it so far. And if that's the case, do not hesitate to leave a like for this video, so it's gonna be seen by more people, and very honestly, it's gonna help us a lot. Thank you very much. So let's go to the remaining 4 portfolios that are even more interesting. The Rising Eagle portfolio, as the name indicates, plays for appreciation. And here we again have the Emaxis Slim US Equity S&P 500. That's one I personally invest into as well. Very small expense ratio. It is in Japanese yen, so if you're investing in Japanese yen, there is a currency risk, so just remember that. The second one comes from Goldman Sachs Asset Management, and this is focusing on technology. So I dug a little bit more to understand what is actually inside that fund. Unsurprisingly, it invests most of its money in North America, a little bit in Asia, a little bit in Europe, and its top holdings are no surprise for anybody. This is Alphabet, Nvidia, Microsoft, Amazon, Apple, and Marvel Technology. So basically, those are the darlings of the Nasdaq. It's an interesting fund, but it's quite an expensive fund at over 2% expense ratio, so it has to outperform to be really worth your money over the long run. The third fund is also a REIT from Daiwa Asset Management, and this one focuses on the US. So if you follow the news, the US real estate market is supposed to head into a zone of turbulences. So really investing on this one depends on your sentiment about what the US real estate market is going to do, both on the residential side and the commercial side. The popular elephant portfolio goes for diversification and try to smooth out all the possible up and downs of a single given market. And the first fund is actually a fund from SBA Asset Management, which is actually the broker where I have my own NISA account. And this one is a whole world, a global equity index. So basically, it's the whole global market of equities, and it actually replicates the FTSE Global All Cap Index. Very low expense ratio, a good way to basically invest on all possible stock markets in the world. Let's continue with number 2, which comes from Allianz Bernstein, which is an asset management firm that us retail investors don't hear about too much. And this one is more on the US market and is focused on growth. And it invests in a lot of different sectors of the economy: technology, healthcare, consumer cyclical, communication services, industries, financial services, and basic materials. So basically, it invests in the whole economy. It's a little bit on the expensive side for the expense ratio. We're almost at 2%. So if you think that the US economy is going to do well overall, that's a good one to invest in, but to avoid having a high expense ratio, there are other funds with lower expense ratio for the long run that could be interesting. This third one from Nikko Asset Management really was intriguing to me. It's about robotics. It's a robotics fund. It's quite on the expensive side and expense ratio, so I was really wondering, what are they investing in? First, which countries? Mainly North America, more Asia than Europe. So those are the 3 that they invest the most. But what was really interesting is, what are their top holdings? And we have Intuitive Surgical, Keyence, which is a Japanese company, Microsoft, Rockwell Automation, Disco, also a Japanese company, Nvidia, Alphabet, SMC, ABB Limited, which is actually a European company, and Hitachi. Overall, very large company that are working in everything that's robotics. And it's not only the cute robots that you can see around, it's also the robots that help production lines, robots that help in the medical field as well. 2 more portfolios to go. The first one is the future Flamingo. This one is betting on long-term trends. So it's better if you have a long time frame in front of you in terms of investment, because those may not play out immediately, but in 5, 10 or 15 years. The first one is also from SBI, my broker like I mentioned, and this one goes into the global emerging markets, and it's also based on another fund, which is the FTSE Global Emerging Market Fund. So it tries to replicate it, not too expensive. The second one comes from HSBC and focuses on India, the second most populous country in the world, and a country that's developing so fast with a very young population. And it focuses on infrastructure, everything that makes a country run. Think about roads, telecommunication, airport, ports, water system, electricity, anything that makes a country work. In terms of sector, we're talking about the industries, energy like I mentioned, basic materials, utilities, financial services, real estate, communication, healthcare, and consumer cyclical as well. So that's a bet on the long term. It's an expensive investment, so you'd better double check if that makes sense for you from a financial standpoint. The last one is from Nomura Asset Management, and it's part of their series of investment funds that focus on a specific industry. This one focuses on the semiconductor industry, And obviously, this is North America, this is Asia, this is Europe. And all the companies that are in the top holdings are well-known names. Nvidia, Taiwan Semiconductor or TSMC, Broadcom, Intel, Qualcomm, Apple Materials, ASML Holding. This one is from the Netherlands. If you don't know ASML Holdings, sorry. This is the company that build the machines that help build the microchips. So basically, they build multi-million-dollar machine that helps the likes of Intel or TSMC or Nvidia build their chips. So this is one company that makes those very specific machines. This is such an important company. If this company is not around, there are no microchips. So having it in the list is really, really important. Then Micron and Clark Corporation. Very focused on semiconductor, a tiny bit expensive, but semiconductors are everywhere in our everyday life. So it's definitely something that's going to keep on growing and a good bet on the future, in my opinion. And finally, our sixth portfolio, the index dog. Basically, very broad indexes trying to lower the cost and have diversification. Quite an interesting one. And the first fund is a fund we saw in the elephant portfolio, again from SBI Asset Management, which is a world index, also based on the FTSE Global All Caps Index, very low expense ratio, for this index. Let's go to number 2, and it comes from Sumitomo Asset Management. It focuses on Japanese equity that offer a high dividend yield or dividend aristocrats. This type of funds exist everywhere. In the US, you have the equivalent fund. This one is for Japan, and the dividend in Japan traditionally is lower than the US. This one has an average of 3.7%. It's very low dividend yield, but it's changing because now, as I mentioned earlier about real estate, Japanese companies are focusing on their core competencies. They are trying to give more value back to the investor, the shareholders. So I think, from what I read, that the yield should increase over time. And the type of companies that we are talking about are very well-known Japanese companies such as financial services, basic materials, consumers, technology, real estate, energies, healthcare, defense, and utilities. So the basic that always give a lot of dividends. So interesting for the future, I believe. The third fund is from Daiwa Asset Management, and it's part of their i3 series that is very popular in Japan. And this one is the FANG Plus Index. It's based on the US index of the same name and focuses on the FANGs and a bit more. So all the darlings of the Nasdaq, Meta, Apple, Amazon, Netflix, Microsoft, Alphabet, CrowdStrike, this company, this cybersecurity company that made a mistake and got the whole North America on grind to the halt in August. I almost got caught in an airplane as well during my trip because of that, but it's still a company that everybody focuses on. Then Nvidia, ServiceNow, and Broadcom Inc. Here you are, the top 6 animal beginner portfolios to inspire yourself from for your investing, whether you live in Japan or abroad. These are 3 fund portfolios meant to be kept in tax advantageous accounts for long-term buy and hold investors. Remember, do your own research before investing, and this video is not financial advice, it's just information I found online for entertainment purpose, nothing else. Let me know in the comment down below if that was useful. Do not hesitate to give a like and subscribe for more videos about Japan and personal finance, like this video or that one here. Thank you again for watching, and until next time, goodbye.